You've landed on the Moon Show, and today I'm gonna give you a money glitch. Imagine if you can do derivatives trading and your profits will be paid out in Bitcoin and Ethereum instead of USDT, because USDT loses money over time, and also who wants dirty USD? What you want is Bitcoin and Ethereum, and especially in a bull market when crypto prices keep going up, and if you hold the position for a long time, your profits will be calculated in Bitcoin, and then Bitcoin keeps going up in value, so you make exponentially more money. That's what I'm going to show you today, how to do on BloFin with coin-margin derivatives pairs. Now, make sure you subscribe to this channel, because this is just one of thousands of very important videos I'm making on this channel. And also, very important, before I show you how to actually make this trade, if you want to get free money from BloFin, you can actually sign up with my link down below and get an exclusive sign-up bonus. So right now, for example, you can get 35 USDT for free with my link down below. And I know it would have been nice if it was calculated in Bitcoin. I'll tell them, I'll call them and say, hey, let's change the bonus. But for now, it's 35 USDT in the link in the description. So it's free, whether it's Bitcoin or USDT. And there are even crazier prices. It ranges up to thousands, even 100,000 USDT if you make big deposit and if you have good trading volume. So click the link at the top of the description. All the information is there. There is rewards and bonuses like no other exchange. But before we begin, make sure you subscribe to my YouTube channel for more updates from BloFin and others. Also, please note that nothing in this video is a financial advice. Before we dive in, make sure you click on my top link in the description and create your BloFin account. BloFin is offering special rewards and bonuses for futures traders. These rewards start with a 35 USDT trading bonus that you can get with a minimum futures trading volume of up to 500,000 USDT. The rewards go on, the more you trade, the better prices you can receive. If your futures trading volume exceeds 9 million USDT, you will receive a 500 USDT trading reward. And to get the top reward of 100,000 USDT trading bonus, you should have a minimum futures trading volume of 1.5 billion USDT. With my link, you can get all these special trading bonuses. So BloFin is an advanced cryptocurrency exchange where you can trade coin-margined perpetual contracts, generally using up to 100 times leverage, although most contracts offer up to 50 times leverage depending on volatility and liquidity. The platform offers multiple trading pairs, enabling you to easily leverage top cryptocurrencies like Bitcoin and Ethereum. You get a user-friendly interface and essential trading tools to make each transaction smooth. Additionally, the futures trading fee structure is competitive. The maker fee is 0.02% and the taker fee is 0.06%. Also, these fees reduce as your VIP level on the platform rises. For instance, if you are a VIP 5-level trader on BloFin, there is no maker fee, and the taker fee is 0.0350%. Now, to trade coin-margined futures contracts, you should first understand what they are. Coin-margin futures contracts are crypto derivatives where your margin and profits are settled in the underlying cryptocurrency, not stablecoins. It means you deposit Bitcoin or Ethereum as margin, you trade contracts that are usually priced in USD, and your profits and losses are paid in the same coin you used as margin. For instance, if you trade a BTC USD coin-margin contract, you post margin in Bitcoin, and if the trade is profitable, you earn more Bitcoin, not USDT. It also gives you the chance to make more profits in case the value of Bitcoin rises. This is very different from USDT-Margin futures contracts on BloFin, where everything is settled in stable coins like USDT. So you know what coin-margin futures contracts are, but it is also crucial to understand their difference with USDT-margin contracts. There are three key differences between coin-margin and USDT-margin futures contracts. The first one is that both use different quote currencies. USDT-margin perpetual contracts are quoted in USDT, while coin-margin perpetual contracts are quoted in USD. As a result, the index price used for these contracts differs. For instance, if you trade the BTC USDT perpetual contract, its index price is derived from the BTC spot price quoted in USDT. On the other hand, the index price of a BTC USD coin-margined perpetual contract is derived from the BTC spot price quoted in USD. The second difference concerns the margin asset. All USDT margined perpetual contracts use USDT as the margin asset. You only need to hold USDT to trade different contract pairs. Conversely, coin-margin perpetual contracts use the underlying cryptocurrency as the margin asset. It means you should hold and deposit the corresponding asset. For instance, to trade the BTC USD Coin-Margin Perpetual contract, you should deposit BTC as margin. The third key difference is the use of different profit and loss settlement currencies. Profit and loss are calculated and settled in USDT when you trade USDT-Margin Perpetual contracts. But when you trade coin-margin perpetual contracts, it is settled in the underlying cryptocurrency. For instance, when trading the BTC USD Coin-Margin Perpetual contract, both profits and losses are settled in BTC. To better understand the difference, let's consider an example for opening both a long and a short position using coin-margined and USDT-margined contracts. For instance, you believe the price of Bitcoin will rise, suppose from $10,000 to $11,000, and you open a long position with 10 times leverage. Both contracts generate profits, but the key difference lies in settlement. The coin-margined contract pays profits in BTC, allowing you to benefit further if Bitcoin continues to appreciate, while the USDT-margin contract settles profits in stablecoins. Now, let's assume opening a short position where you think the price of Bitcoin will fall, suppose from $10,000 to $9,000. Both contracts again produce gains, but USDT-margin contracts deliver more predictable returns, whereas coin-margin contract profits are settled in BTC, and their final value depends on Bitcoin's price movement. So, you know what coin-margin futures contracts are and why traders prefer them. Let me show you how to trade them on BloFin. But before that, click on my top link in the description, create your BloFin account, start trading, and receive rewards designed exclusively for futures traders. Once you are on the BloFin website, create your account, complete KYC, and make a deposit. You can watch my full BloFin tutorial that I posted earlier to watch all these steps. After you sign up and make a deposit, you need to transfer funds to your coin-margined wallet to trade coin-margined contracts. For this, you click here on Assets and then click on Futures, select the cryptocurrency you want to transfer, such as Bitcoin. Click on Transfer here, select Coin-Margin account, enter the order amount, or click All to transfer all assets, confirm the details, and click Confirm. Now, click Futures here in the menu bar, then select Coin-Margin, and it will take you to the corresponding trading interface. BloFin offers you an intuitive trading interface with all the required features. You can easily select a trading pair, view the current price changes and the trading volume in the prices section, see the current trading prices in the order book, use advanced order types, and open a position in the order panel. The trading chart, powered by TradingView, lets you adjust timeframes and select indicators based on your strategy. To open a coin-margined futures position, click here and select the trading pair you want to trade. In this case, I am choosing BTC USD Perpetual. Click here to choose the time frame and adjust the trading chart according to your trading strategy. Next, go to the order panel and choose the margin mode between cross and isolated. The isolated margin limits the collateral used for a single position, protecting the rest of the balance if the trade moves against you. On the other hand, cross margin draws from the entire futures account balance to support open positions, reducing liquidation risk but exposing more funds in the process. Click here and choose the leverage, and you can choose up to 100 times leverage. Remember, a higher leverage poses a greater risk of liquidation, so always be careful when selecting the leverage. Next, select the order type, such as limit, market, or you can choose from all these available options. Enter the order amount, for which you can also use the percentage bar. You can also add the take profit and stop loss to your position, which is optional. It provides you with better control over your position. Click the TPSL box and enter the take profit and stop loss values. You can also use advanced settings. Click on advanced, enter the take profit and stop loss values, and click on confirm. Review the order details and click either buy long or sell short, and press confirm to open your position. You can check the details of your position in the Positions tab, including the trading pair, leverage, margin, and more. Here, you can close your position in two ways. First, to partially close the position, click here on Action, enter the amount you want to close, and confirm it to close a part of your position. On the other hand, click close, all to close your position entirely. So you know how to trade coin margin futures contracts on BloFin. Let me tell you about the top advantages of trading these contracts. First, when you trade coin margin futures contracts, you earn more crypto. Your profits are paid in the underlying assets such as Bitcoin, that is perfect for long-term believers. Second, you compound gains when the market turns bullish. If the price rises and your coin appreciates, you gain quick profits. Next, these contracts offer an effective hedging tool. They enable you to protect spot positions from short-term downside without having to sell your underlying assets. Additionally, by avoiding reliance on stablecoins, you reduce exposure to stablecoin-specific risks and eliminate the need for frequent asset conversions. Coin-margin futures contracts are a powerful way to trade, hedge, and grow your crypto holdings, especially in volatile and bullish markets. But remember, higher rewards come with higher risks. Use them wisely, manage leverage carefully, and trade with a clear plan. Now that you know what coin margin futures contracts are, their advantages, and how to trade them on BloFin, don't forget to click on the top link in the description, create your BloFin account, start trading, and receive futures trading rewards. Thank you so much for watching. I really hope you enjoyed that video. If you haven't seen this tutorial, which is popping up right here, click it right now. See you over there. Bye-bye.